Hey everyone, and welcome back to the channel. Today, we are rediving into a fascinating and maybe even a little concerning trend that has been quietly bubbling up in the corporate world. We're talking about crypto treasuries. Have you heard of them? It's this idea of publicly traded companies adding cryptocurrencies like Bitcoin to their balance sheets, right alongside their traditional assets. Now, at first glance, this might sound like a super forward-thinking, innovative move, and for some companies it absolutely is. We've seen major players like MicroStrategy and Tesla make headlines by investing billions into Bitcoin. Their leaders, like Michael Saylor and Elon Musk, have been very vocal about their belief in crypto as a long-term store of value, a hedge against inflation, and a fundamental part of the future of finance. When they do it, it feels strategic. It feels like they have a plan. But here's where it gets interesting. A recent article from Business Insider dropped a bit of a bombshell. It revealed that there are now 172 publicly traded companies holding crypto on their balance sheets. That's a huge number. What's even more eye-opening is that 48 of those companies, nearly a third of them, just jumped on the bandwagon recently. This rapid influx of new companies is starting to raise some eyebrows, and for good reason. It has got a lot of analysts and market watchers asking a crucial question. Is this genuine innovation, or are we witnessing the beginnings of a new kind of bubble? Does this all feel a little familiar? Think back to the late 1990s and early 2000s. The dot-com bubble. Back then, all a company had to do was add "com" to its name, and its stock price would soar, regardless of whether it had a solid business plan, any real revenue, or even a functioning product. Investors were caught up in the hype, the FOMO, the fear of missing out on the next big thing. Companies were rewarded not for their fundamentals, but for simply associating themselves with the internet craze. We all know how that story ended. When the bubble burst, countless investors lost their savings, and many of those dot-com companies vanished overnight. It was a painful lesson in the difference between hype and true value. So, fast forward to today. The concern highlighted by the Business Insider piece is that we might be seeing a modern version of that same phenomenon. Instead of adding "com" to their names, are companies now just buying a little bit of crypto to get a quick hit of investor attention? Let's break down why this is a potential problem. For a company to truly integrate blockchain or cryptocurrency into its operations, it needs a real thought-out strategy. This could involve using blockchain for supply chain management to improve transparency, developing payment systems that accept crypto, or building decentralized applications. This takes research, development, investment, and a genuine belief in the technology's long-term potential. However, for many of these 172 companies, especially the newcomers, it's not clear if such a strategy exists. Are they actually building anything with blockchain? Are they integrating crypto into their core business model? Or are they simply buying a few $1 million worth of Bitcoin or Ethereum, putting out a press release, and hoping to catch the eye of crypto-enthusiastic investors? If it's the latter, then they're not treating crypto as a strategic asset. They're treating it as a marketing gimmick. They're basically saying, "Hey, look at us! We're cool! We're in on crypto!" without doing any of the hard work to back it up. This is where the danger comes in. Cryptocurrency markets are notoriously volatile. We've all seen the charts, the dramatic highs and the stomach-churning lows. For a company with a genuine long-term crypto strategy, this volatility is just part of the game. They've likely planned for it, and they're holding for the long haul because they believe in the fundamental value. But for a company that just bought crypto for a quick stock price bump, a market downturn could be catastrophic. Let's imagine a scenario. A company with no real blockchain plan buys, say, $10 million in crypto. The market gets excited and their stock goes up. Great. But then, the crypto market enters a bear cycle, and the value of their holdings drops by 50% or more. Suddenly, that $10 million asset on their balance sheet is only worth $5 million. That's a multi-million-dollar loss they have to report to their shareholders. Investor confidence plummets. The stock price that went up now craters. falling even further than where it started. The company is left with a massive hole in its treasury and a lot of angry investors. They took a huge risk for a short-term gain, and it backfired spectacularly. This is what the Business Insider article is warning about. When companies use crypto as a gimmick rather than a strategic tool, they expose themselves and their shareholders to immense risk. It becomes less about investing and more about gambling with corporate funds, and this has a ripple effect on the entire crypto ecosystem. On one hand, corporate adoption is fantastic for legitimacy. It brings in capital and mainstream attention. But if that adoption is shallow and driven by hype, it can actually hurt the space in the long run. A wave of companies buying crypto without a plan and then being forced to sell at a loss during a market downturn can create massive selling pressure, driving prices down for everyone. It creates instability and reinforces the narrative that crypto is just a speculative bubble. So, what should we, as investors or just curious observers, be looking for? When you see a company announce that it's buying cryptocurrency, don't just take it at face value. Dig a little deeper. Ask some critical questions. First, does the company have a clear, articulated blockchain strategy? Are they talking about how this technology will improve their products, services, or operations? Or is the announcement just a one-liner in a press release? Second, who is leading the charge? Is it a CEO and a board who have demonstrated a deep understanding of the technology, like Michael Saylor? Or does it seem like they're just following the latest trend? Third, how significant is the investment relative to their total assets? A small experimental allocation is one thing, but a massive bet that could jeopardize the company's financial stability if it goes wrong is a major red flag. Fourth, what is their long-term vision? Are they talking about holding for 5 or 10 years, or does it feel like they're looking for a quick flip? By asking these questions, we can start to separate the serious players from the pretenders. We can distinguish between the companies that are genuinely building the future and those that are just trying to ride a wave of hype. This isn't IT. To say that every company buying crypto now is doing it for the wrong reasons. There are undoubtedly many genuinely innovative firms among those 172. But the rapid growth and the parallels to the dot-com era are a clear warning sign that we need to be cautious. Bubbles are fueled by herd mentality and a lack of due diligence. When everyone is rushing in without asking why, that's when things get dangerous. Ultimately, the long-term health of both the traditional markets and the crypto space depends on real, sustainable growth built on genuine value and innovation, not on marketing gimmicks and speculative frenzies. The dot-com bubble taught us a valuable lesson about the dangers of hype. The question now is whether we've learned from it. What do you all think? Are we seeing a repeat of history, or is this time different? Are these companies making smart, forward-thinking moves, or are they just chasing clout? I'd love to hear your thoughts down in the comments. Let's get a discussion going. Thank you so much for watching today. If you found this breakdown helpful and want more deep dives into the trends shaping our financial world, please make sure to hit that like button and subscribe to the channel. Don't forget to turn on notifications so you never miss an update. It really helps the channel grow, and it means I can keep bringing you content like this. Stay curious, stay informed, and I'll see you in the next video.